Hey everyone, and a very warm welcome to today's explainer. I am super thrilled to be diving into this with you all. Listen, if you've ever looked at a trading chart and felt like you were just staring at this chaotic, random mess of squiggly lines, you are definitely not alone. It can be overwhelming. But today, we're going to change that. I'm going to give you an incredibly reliable, straightforward method to actually map the markets. And the best part? We're leaving all that complex, confusing jargon at the door.
So let's start with a scenario that I think we all know a little too well. How do you actually find those perfect entry and exit points in trading? I mean, be honest with yourself for a second. How many times have you excitedly entered a trade, absolutely certain it was going to fly to the moon, only to watch the price instantly reverse and just absolutely crush your position? It is literally the most frustrating feeling in the world. Well, whether you're a complete beginner or an intermediate trader, this explainer is designed to stop that painful guesswork and finally start putting the odds back in your favor. All right, so here is our roadmap for today. We're going to kick things off with support and resistance basics, then dive into actionable setups like the three-touch strategy and range breakouts. After that, we'll wrap up with spotting fake breakouts and some absolutely essential pro trading hacks. Okay, let's jump right into part one, support and resistance basics.
Now, you really have to think of these levels as your foundational map. It's the map you absolutely must look at before you even start the car, right? You just can't navigate price action without them. And the concept here is actually incredibly simple. Support is essentially the floor. It's that specific price level where a falling share just stops dropping and bounces right back up. Imagine a rubber ball hitting the ground. The price falls down to this range, the buyers eagerly step in, and the price just consistently refuses to go any lower. By connecting these bounce points on your chart, you map out a very clear trend line of support. And on the flip side of that, we have resistance. So if support is the floor, resistance is the ceiling. It's the exact price level where a rising share stops climbing and falls back down. The price surges up, hits this invisible barrier, struggles to break through, and bam, sellers push it right back down. It's the upper limit of the current price action. Now, it's really cool to notice how these levels adapt depending on the market conditions. In a sideways market, your support and resistance lines are going to look completely flat and horizontal, kind of like walking out a regular hallway. But in a trending market, whether that's an uptrend or a downtrend, those lines will slope up or down, forming what we call trend lines. It's like walking up or down a staircase. The concept remains exactly the same. The floor and ceiling are just tilted. Moving right along to section 2, the three-touch strategy. All right, so this right here is where amateurs guess, but pros wait for confirmation. Let's break it down. Step 1, the price tests the resistance and fails. That's touch 1. Step 2, it rallies back up, fails again. That's touch 2. Step 3, it tries for a third time, gets rejected. Touch 3. By now, you can literally feel the tension building. When the price approaches that line for the fourth or fifth time, boom, step 4 happens, the breakout. The ceiling completely shatters and the price just explodes upward. And if you're wondering just how powerful that explosion can actually be, take a look at this number. According to our source material, one upward resistance breakout using this exact method yielded a massive 170-point move. And honestly, the most mind-blowing part, that whole move happened in just 10 minutes. When that pent-up tension finally breaks, the momentum is fierce. But wait, it actually gets even better if you're watching the floor. A downward support breakdown can be even more aggressive because, well, gravity works fast in the markets. In another example from our source, this specific setup delivered a massive 215-point gain for put buyers in an incredibly fast 45 minutes. So, a quick practical tip for you before we move on. To actually prepare for these breakouts, you need to physically draw these boundaries on your screen. It's super easy. Just go to your charting platform and grab the trend line or extended line tool. Click on that very first touch, drag your cursor across the second and third touches, and just extend it out. Boom! Now you have your tripwire perfectly set and waiting. Okay, let's head into section 3, range breakouts. The mechanics of this are just fascinating. When the price is completely trapped in a tight sideways range, just ping-ponging back and forth, you should think of it like compressing a metal spring. The longer that price is squeezed between the floor and the ceiling, the harder it's going to snap when it finally breaks free. An upward breakout out of that range becomes your buy signal, and a downward breakdown is your short or put signal. And again, the proof is right there in the data. Look at this number, 174. In our range breakout example highlighted in our source,
Once that compressed spring finally snapped and broke the support level, it created a massive 174-point breakdown move, and it was all captured in only 24 minutes. This right here is exactly why we have the patience to wait for the break.
Which brings us to section 4, spotting fake breakouts.
Now, wait a second, because there is a catch. Not every single breakout is genuine. The market loves to throw fakeouts to trap eager, impatient traders. So, to protect our capital, we need a very specific toolkit to act as our headlights in the dark. First, you need to add the standard volume indicator to your chart. Then, and this is key, go into its settings and turn on the volume moving average, or MA. Finally, tossing in a super trend indicator is a fantastic way to quickly confirm the overall broader market direction.
So here is your absolute golden rule for this setup. A genuine, trustworthy breakout must have a volume spike that visibly crosses above that volume moving average line. If the price breaks the resistance line, but the volume is weak and just kind of hangs out below the moving average, yeah, it's highly likely a trap. Just avoid it. You absolutely need the fuel of high volume to prove to you that the breakout is the real deal. And I want to share this brilliant pro tip directly from our source material because it saves options traders so much headache and confusion. If you trade indices like Nifty or Bank Nifty, you've probably noticed that volume data is totally hidden on the standard spot chart. That's because you can't buy or sell the index directly. So to actually see the volume data and verify your breakout, you have to open the futures chart for that specific index. Game changer, right?
Finally, let's wrap up with Section 5, Pro Trading Hacks. These are the ultimate safeguards. This is what separates the seasoned pros from the people who are just gambling. Consider this your golden rules checklist. First rule, always wait for the candle to close. A candle might poke its head above resistance and look like an amazing breakout, only to aggressively pull back right before that time frame ends. Second rule, wait for a retest. This is an incredibly powerful concept. It's when a broken resistance level drops back down to become the new support. If it holds its ground there, your odds of a successful trade absolutely skyrocket. And third, confirm your setup across multiple time frames. If you spot a great setup on a 1-minute chart, just take a second to check the 5-minute and 15-minute charts to make sure you aren't trading against the bigger trend. So, all of this brings us to one final thought for today's explainer. Are you ready to stop guessing and start actually trading the price action? By truly understanding these floors and ceilings, having the patience to wait for those 3 touches, verifying everything with volume, and rigidly sticking to our golden checklist, you can completely transform the way you look at your trading charts. Seriously, try mapping these out on your screen today and just see the newfound market clarity for yourself. Thank you so much for hanging out with me on this explainer, and hey, happy trading out there!